What's cracking, YouTube? We back with another episode from Trenches to the Riches, y'all. Listen, now today I want to talk about the 3 Chinese stocks that I'm invested and interested in: JD.com, Alibaba, and NIO. Okay, I also want to check it to Tencent and see what's going on about that. But I just want to talk on the Chinese stocks overall, okay? Now, what I see with the Chinese stocks, that everybody is in a rush to make money while they're going through troubles, okay? Everybody's mad that Alibaba is down 11% after earnings. NIO is down at all-time highs, okay? JD is down from all-time highs. If you was a person that was investing, this is why I tell people all the time, you should be buying stocks mostly when you see them at a decline and they're a great company, okay? A lot of people like to sell, I don't know why, they in a rush to make money. They say they are a long-term investor, but they want to invest while stocks, the chart is going up. If the chart is not going down, 9 times out of 10, I don't want to invest into the company. I want to wait until a pullback, unless it's a great, strong foundation company like Starbucks that barely pull back and you got to take every opportunity that you could, because it's really those companies like that. But to have the mindset just to invest in companies that's going on an uptrend, it don't make no sense. Alibaba, NIO, JD.com is all at a decline. China is going through something right now, and they are the largest middle class right now, growing middle class. All right, and at this time, these companies is not doing bad. All right, the companies is not doing bad. When I see these companies growing is innovation. They're growing. Okay, let's talk about NIO real quick. NIO has a partnership with CNOOC. Okay, that is a China National Offshore Oil Company. All right. It is the 3rd largest oil company, okay? And what is this partnership doing? You already know what they're doing. Like I told y'all before, they throwing these EV charging stations all around the world. They have a deal with Shell gas station, now offshore gas station. Like, you don't see the partnerships that's going on. They also doing some things with energy, okay? Also doing the NIO phones, the NIO houses. I told y'all, this is not a short-term play. This is a long-term play. These things need time to develop. Okay, Alibaba is a profitable company. They're making money. Revenue is growing each year. Why are people in such a rush to make money? All right, if a company is growing revenue every year and the stock is going down, you should be excited. When Alibaba went to $100, 120, I'm like, I'm not going to touch it. I was mad it went up so quick. I'm actually hoping it went down. And what it's doing right now is going down, all right? You want to see what's going on, all right? You want to look at these charts, all right? Let's check out Alibaba. Alibaba was at $200 a share. Let me go to it right now. Okay, on a 5-year, Alibaba was up there like close to $300 a share. Is that $75? What's the rush to make money? Okay, you're getting it at a dip. I'm hoping it go to $60, $50. All right. If you're a long-term investor like you really say you are, why are you panicking about the stock going down 11%? And I see this with a lot of people. They're mad because these stocks are stagnating or slowly in the downtrend for a year or 2 or 3 years. This is the time to buy more shares at a discount. I don't get why everybody's so mad about this. All right, buy low, sell high. All right, and we at the lows, and it seems like everybody's scared to touch this. All right, when these companies at their lows, you got to realize that these articles like to throw out bad news to scare people, all right? Scare people, and they're going to scare you a little bit more. They're going to get the paper hands out, and they're going to bring the diamond hands in. Like Warren Buffett said, is the stock market is a tool to bring money from the impatient to the patient, okay? Alibaba, they company has a few bullish. They are up in the 4th quarter of 2023. 74% of Alibaba total revenue came from China and international commerce. Okay, That's similar to Amazon. They own 51% of shared online retail shares in China. That is powerful. That is a moat. Okay, they have a competitive advantage. All right, they have 50%. All right, they're growing 9%, 10% year over year. All right, even despite with the shutdowns and everything that's going on, these companies are still doing good. Be patient, people. Be patient. All right, dollar cost average. Don't not be mad at yourself because you bought Alibaba and Shenzhen and JD.com at a high price. You gotta understand the price that you bought it at. You may be thinking, oh yeah, I bought it at a fair value. No, you bought it at a bad price. And sometimes we have to just wait and probably dollar cost average in, or either sell and buy back in. But sometimes we have to be patient. Yes, I'm investing into Alibaba, but am I buying any shares right now? No. I want to wait and be patient and see if it drops to $65 and hold more cash. See if it dropped to $50 a share, okay? It's a waiting game, it's a patient game, okay? Another episode from Trenches. No, one more. I want to look at the chart real quick on NIO, okay? Let's type in NIO. I want to give y'all an example, okay? NIO went all the way up to $61 a share. It's currently at $7 a share. Do you know how happy I will be to have NIO at $5 or $4? Okay, and that's what I'm waiting for. All right, that's what I'm waiting for. I want to see NIO go down to $5 a share. All right, and that's when I'll be jumping into a few long-term calls. All right, but I want to see this happen. All right, so another episode from Trenches to the Riches, y'all. Let's get this money.